Good morning, everyone. So, I want to talk about some big news in the finance world because that's what we're here for. And this was actually, dude, I was going to do a different video today. I was not going to do this video talking about this because the recent news had been about the tariffs and obviously the stock market crashing and talking about stuff about, like when the stock market's down, right? That's when it's a really good time to buy. So, because over the long term, we know that the stock market goes up. If you ever look at the graph and see it, you'll see the stock market, has peaks and it has times where it really goes down. But over the long run, it does go up. So really, when it's down and people are panic selling like they were doing recently, that's when you can buy. I mean, you can buy anytime. That's when you can buy and get some really good deals on stocks. So that was part of what I was going to talk about today. But I wake up, get going, and here's like the first thing I see about tariffs. All the search results are different now, talking about the tariffs and how now President Trump has changed for the next 90 days. Which says, this article from PBS News says he backs down on most tariffs for 90 days, but raising rate on Chinese imports to 125%. So, where I live here in Las Vegas, you guys can see the artwork behind me. This has been something that people have been following in the hospitality industry here because of the amount of international travelers that we get to Las Vegas. So that's been talk for quite a while now about how tariffs would impact international travelers visiting Las Vegas. So, but on a larger scale, especially a global scale, it has impacts around the world. So, some of you have seen the video or seen the image of all the different tariffs he was planning to put in place. I saw some of this. I saw this too. But as we take a look at it, it's interesting because, like I was saying a moment ago, I mean, recently it was just markets plunging, S&P down, and this sort of thing. And, I'm sure there are people who were going ahead and jumping on it and buying when they saw it was down. And then here we are today with, a change. And then all of a sudden we have, let me show you this next article here. Stocks surge after Trump announces 90-day pause. So 90-day pause is like your stock market just jumps back up again. So, I mean, it's amazing how, just what comes out in the news or what, just what comes out in the media and what people are seeing and following, what they're watching, and what gets announced from DC has such a massive impact on the financial decisions that people make. So I'm sure some of you, whether you hear, regardless of what's happening with tariffs, good, bad, or neutral, you're buying consistently over the long term. So that's really what I would encourage people to do too. I mean, you can try to time markets, but that's a tough game to play because long term the stock market goes up consistently over a long period of time, as we've seen. So now we have this 90-day pause, and we're going to see what happens now in the next 3 months. So with the 90-day pause, stock market just jumped right now, but there's going to be some suspicion because people are going to be wondering, okay, what's going to actually happen in those next 90 days? Will there be another change at the end of those 90 days, or what could we end up seeing? And this is where this next article is talking about this, how the next round of tariffs could hurt even more. So, because that's where people are going to be, a lot of not just big time investors, but, the everyday investors like you and me, the person who is not super wealthy, has ownership in stocks. So, those are the people who oftentimes have, you could say, the most concern about the stock price. Because lots of people have part of their retirement in the stock market. And that comes to a good article right here. This actually brings me to something that I remember seeing when I was in college, a professor of mine talking about. But I'll show you this right here. This article talking about, it says who really lost from Trump's stock crash. And they explain it in two charts. This says here, it's not just the wealthy. And that's true because a lot of people think stock market, they think Wall Street, they think it's just wealthy people own stock. I'm sure plenty of you have money invested in different stocks, different companies, or index funds, or whatever the case is. And part of your own money and your retirement is tied to the performance of the stock market. So this makes a good point right here. It says, who invests in the stock market? It says, the majority of Americans, 62%, own stock in some form or another. So whether it's individual, right here, whether it's individual stocks or their 401k, IRAs. I have a Roth IRA that I put money into, mutual funds, pensions, and those sorts of things. If you're self-employed, you might have like a Roth 401k or SEP IRA or something along those lines. But it does show the percentage of people who own stock. This is almost 2/3, about 62%. As this other chart here says, it's not just the wealthy who own stock. So it says while households who are making over 100,000 a year overwhelmingly own stock, significant shares of middle and low income Americans also own stock. Now, if you're a household making over 100,000 a year, in most parts of the country, that's a really good income. Even if, in Los Angeles, San Francisco, New York, right, Miami, Chicago, it's tougher depending on how big your family is on that income. But generally speaking, if you're making a six-figure income, you have more disposable money to invest. You have more money because the income you earn is higher. You can have more disposable income to put into investments to then grow your money even more, especially if you wind up making smart investments with it. But this does give a breakdown of the numbers of the people who are invested based on the different types of income levels that we see across the country. So even as people make less than 40,000 a year, shows 25%. This is as of May 2024, so it's not quite a year old, but this still gives you a general idea of the variety of people and the broad spectrum of people who do wind up investing in the U.S. stock market and have a portion of their net worth and their income and their retirement for themselves tied to the market as well. And it reminds me of a story when I was in college, this accounting class I took. Because, oh God, man, accounting was very boring, especially if you take it in college, man. It's a little more fun when you're a business owner and you're self-employed and you learn about tax write-offs and that sort of thing. It's a bit more fun then. But when you're in college, man, and you listen to accounting professors talk about debits and credits and GAAP and that sort of thing, it's freaking boring. But this one professor I had, he actually talked about this same concept, but it didn't have anything to do with, tariffs from a president. It had to do with increasing costs on businesses or increasing taxes on businesses. And, he was saying how, when you increase costs for businesses, or he's talking about when businesses have to take on more costs and just anything that hurts a business's, and also add more regulations to business. That's what it was. Talking to about adding more regulations to businesses. Because anything that, can make the cost go up for the business to operate, anything that is going to have to end up getting passed on to the end consumer, or just talking about stuff that that hurts the company's stock price in general. One of the points he was making is, people think if they tax businesses more, that they're somehow, hurting wealthy people, hurting millionaires and billionaires and that sort of thing, and that makes them feel good. But what he was saying, this professor was saying, well, there's also lots of people, himself included, who have money invested in the stock market. So the question he asked, he just said, so, who are you really hurting if you're going to add certain regulations or taxes to businesses and the stock price goes down? So that was just something that he shared in class I thought was kind of interesting. And actually, here I am now, over a decade later, telling that story in something that I think a lot of people could relate to, seeing the stock market go down based on changes that happen out of DC and how it impacts their overall financial future and their retirement. So I want to hear what you guys have to say about it down in the comments below. We got more finance topics to cover on this channel going forward, but I appreciate all of you being here. Thanks, guys. I'll see you later.